Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we welcome Todd from CTS to talk about the new options and spread features in the T4 platform. Some of the bullet points include theoretical trading from theoretical sheets and the analyzer, including a quick hedge feature. Also trading from and talking about the solver, option strategies windows, request for quote, and also the creation and trading of user-defined spreads. Also, Todd wants to talk about the risk analyzer and some of those features, including stress testing. As you guys have questions, you can type them into the questions box, and Todd will do his best to answer those. Also, this webinar is being recorded, and I'll post the recording on BMT as well as our YouTube channel later today. If you are watching the recording at a later date and you like it, do me a favor and give us a thumbs up. All right, with that, I'm going to turn things over to Todd, and we'll get started. Okay, Todd, we see your screen. Yeah, go ahead.
Great. Well, thank you, Mike, for hosting this for us, and we appreciate everyone attending the webinar. My name is Todd. I'm with CTS, and a brief description of CTS is we are a fully hosted solution with direct connections to the exchanges. We do have multiple level packages, and the package where we'll be overviewing today is the Options Pro package, and we will be keying on several things: spread creation, simplicity of use, and the analysis of the options risk. Basically, what we're trying to do with the Options Pro package is giving professional tools to all levels of participants. The majority of these tools either have been A, too expensive, or B, too difficult to use from other programs. So we set out to try to make things as efficient and simple as possible for all users. We will be in our test environment in order so we can send the exchange actual information and get responses from the exchange and other market participants in the test environment. And we will demonstrate how to create UDSs, which is a user-defined spread, and then an RFQ, which is a request for quote on a defined spread. So as a very quick introduction to Options Pro, by clicking on the main toolbar, you will see several components you can add to your desktop. Every icon with the O representing options with the light blue background is part of the Options Pro package. So you can have option sheets. I'm going to open up an S&P option sheet. This option sheet is an independent window that can be moved around with multiple months in it. You have your choice between horizontal and vertical looks. You can also, one of our new features is a Windows container. And inside a Windows container, you can actually place the option sheets as well. So we have both independent windows, and then we also have the Windows container, which you can put several option sheets in. The simplicity of the way the option package works can be best explained through demonstration. So again, I will quickly create a option sheet in the S&Ps. At this point right now, we have every month is placed inside the sheet. We have tied all the futures to the correct underlying. We have tied all the correct expiration dates, and automatically it will update any newly available strike to trade. So the maintenance is very low. To set up your theoreticals, you simply create a new series, and inside a new series you get every month. So in this case, We can go to our first month, and we can simply fit the electronic market. Oops. And it will build the volatilities and hence giving us theoretical values instantaneously. So again, the simplicity of it is you can set up multiple months with theoretical values quickly. This is also another method for managing your theoreticals. The benefit of having theoreticals is to understand valuation versus the marketplace. So in this case, we are going through every single market for S&Ps every month, and we are setting up volatility skews for each one. The orange dots you see there are the settlement volatilities. You can also set to the current electronic market. We are choosing to set to settlement volatilities for the moment, but it allows you to fit the electronic market in multiple ways. Fitting the electronic to current volatilities allows you to go to current conditions. Fitting it to settlement obviously fits it to the settlement volatilities, and then you can see the changes from settlement to current conditions. So the one we'll be demonstrating today is in the August. The August sheet, currently in the test environment, we do have a single offer in the 1935 put. You can trade directly from the sheet itself. You can set up default quantities. We can also see our working orders directly in the sheet. I just placed an order to sell 50 of the 1935 puts. And then we can see by pressing on the order cell, that you can manipulate the order very quickly. So with that brief overview, I will move on to a UDS creation. So we can, by pressing on the theoretical call or the theoretical delta, and then I'll press on the theoretical put, we'll look at our options strategy solver. We have added 2 legs to the solver, and it automatically picks a template for you, and we can pick the straddle template manually or the risk reversal template. We can switch between the bias, so we demonstrate everything through a buy bias and or a sell bias, so you can toggle between the two. At the point at which we applied the straddle strategy, in the middle here, you will see that is the theoretical value of our straddle. To the left is the bid price, the bid size. To the right is the offer price and the offer size. Directly from here, you can obviously see, you can view your theoretical value and the current bid and offer of the strategy. By pressing on the theoretical value, you can see the depth, and in this case, let's see if there is any depth. You can also place orders, manipulate the orders, including cancel. As you can see, a bid just popped up that is higher than the current bid. We can also trade directly from the solver, and I have the ability to hit and to lift from the solver itself. I'm going to clear out those legs, and I'm going to add 2 puts. We can then see here that we have a theoretical value of 182.6. We are not receiving any bid and offer in the marketplace. This is for one of 2 reasons. One, that the UDS does not actually exist at the moment. And 2, the exchange would need to accept the UDS. So our creation method is very simple. Once you queue up the legs and pick the strategy you would like, if this was green, we would know that it's tradable. So we will RFQ it, and it has now turned green, which means the exchange has now accepted that strategy as a tradable strategy. And you can also see we have an RFQ window. as RFQs come in, new RFQs, you will be able to see the actively requested for quote strategies. We can continue to RFQ. The purpose of RFQing is to A, either get someone to make a market for you, B, to attempt to try and tighten the market. Those are the main two properties of RFQing. What we've done for simplicity's sake is simply when you build your strategy, and again, if the background is not green, that means that there is no tradable spread yet. You simply hit the RFQ button, it will go off, create the strategy, and once the strategy is created, it is available for trading. Now in the RFQ window, you can see directly that we have our theoretical price, we can see the bid price, and we can see the offer price continuously. If there is an RFQ that comes in that we would like to see and basically save so that it becomes higher priority for us, we can right-click, we can obviously trade, re-RFQ, we can send that strategy to the solver to get more in-depth, and we can save. By pressing the Save button, it will move it over to the Save window so that we can keep that more local to what we want to view in terms of what strategies are available to us. So in this example here, we can trade directly from the RFQ window. We can also use, by pressing on the theoretical values, if they are green, have a green background, that means they are available to trade. You will have the ability to trade using the ladder as well. And again, you'll be able to place different types of orders. Oops, there you go. Now, in terms of click trading, we can take this trade here, and I will sell 5 of these. Sorry, we'll sell 4 of those. Actually, we did add this feature that you can actually put the amount you want. And when I sell 5, it immediately goes into our analyzer. So now it is added to our inventory, and we have multiple slides that we can view the risk analysis from. I'm going to change the view to our most advanced view, which will show the P&L with the deltas, the vega, gamma, theta. We have OEV, which is equivalent options based on the at-the-money vega. Equivalent OEG is equivalent options based on the at-the-money gamma. And OET is the equivalent options based on theta. As we go between the different slides, which is a net slide, which is the highest in the hierarchy, meaning it combines all inventory and puts it together for you under one environment. Then we have a contract slide. Oops. A contract slide would be broken up between different commodities. In this case, we only had the S&Ps on, but if we had the S&P and the corn, they would both be separate. As we break it down even farther, we can see it by the S&P contract month. So this would take the S&P futures and look at all the options, place all the options that would expire into that future into this risk slide, and then you can get more granular by going into each individual month. Now, Mike was talking about the ability to quickly hedge. Let's do a strategy here. I will buy, let's see how many we can buy here. I'm going to buy some outright options. And you can see we have now acquired a delta of a -0.5, acting like a half of future. When you press on here, you can trade directly from here by pressing on it. You can right-click, hit trade. It will pre-put up your delta for you, and then you just simply have to pick the side. So now we have bought one future, which reduces our risk, obviously trying to get the delta as close to 0 to reduce our futures directional risk. that is the introduction to the major parts of the spreads, the simplicity of creation, the simplicity of creating theoretical values, managing them, and having the ability to go over or to analyze the risk associated with options. The one thing I did fail to mention is that you not only can you see your account inventory, you can see the individual trades, you can change the view so that you can change each item that you would like to see. So in this case, under the contract month slide in the basic view, which you can customize what you would like to see, versus the simple view, which only shows you a few pieces of information. You can change how many simultaneous slides you see. You can move them left to right. So you can see more upside and more downside, and then you can also recenter it. If you had multiple accounts, you could actually analyze each account individually. You also have the ability to print, save the information to PDF. You can copy it to the clipboard, or you could save it to Excel. I can now open the floor to questions.
Okay. Thanks, Todd. All right, guys, so go ahead and start typing in your questions, and we'll see what we can get answered. Michael has a question asking if he can use the T4 software, but using his Interactive Brokers account.
No. That Interactive Brokers, we are a fully hosted environment, so we supply the market data. We are not a third-party app.
All right, let's see if any other questions come in. I am simply not an options guy, so I really can't ask too many intelligent questions myself.
Oh. Well, to give you a brief idea of what was just presented is the ability to create multiple things. So in other words, the ability to create a strategy, the ability to see your theoretical values, the ability to trade what's currently in the marketplace and be able to understand what people are interested in. So we can go over a couple of those topics very quickly. Maybe that will generate a few more ideas. In the RFQ window, what the RFQ window is basically doing is as a RFQ comes in, maybe we can get somebody to RFQ something. There is a brand new RFQ that has just come in. So as I press on this, I can see that somebody in the marketplace is saying, hey, I would like someone to respond to this. So this would be very similar to having a broker in the pit representing somebody's order and saying, can someone please tell me what the market is? So the mechanism of RFQing is, given the complexity of how many option strategies are possible, the RFQ window allows the chronological organization of what people are interested now. As you can see, we have another RFQ just came in. We can also do something that's a nice feature, is we can group the RFQs by strategies. And we use our proprietary algorithm to group these strategies so that we can supervent the exchanges definition. So to give you an example, ICE has a completely set of different definitions than the CME does. So what we did is we came up with a single convention to help describe what the strategy is trying to do. We will display the exchange name right here as well. This is a great example. Let me just make this window so we can see it a little bit clearer. We call this strategy here a call fly. The exchange will actually label this strategy as a generic. The reason that this is not accepted as the exchange as a call fly, although it is accepted as a strategy, is because the difference between the strikes is not equal. So we have what they refer to as a lopsided butterfly, call butterfly. A lopsided call butterfly in their definition is considered a generic. we go back in with our algorithm and say, well, you may call it a generic butterfly, but it is still a call butterfly, and that's how we label it. So we have the ability to, this is our strategy name here, and this is what the exchange gives us back. So they're saying this put spread is a generic. We say, hey, this is still a put spread. It just happens to be inverted weighting. Typically, a put spread that is weighted is 2 of the low strike and 1 of the high strike. So you can see in this description, we are selling 1 of the low strike and buying 2 of the high strike. So the ability to see what's going on in the marketplace and what people are most interested in terms of option strategies is inside this RFQ window. Now, taking that idea, we can also have another, oops, let me get this for you. In our contract history, and this comes with the professional options package only, is we can open up the options history. There is an All tab, and inside this All tab, you will actually see every single trade that comes through for the S&P 500 options. So as we get some, we just had a spread come through. It is highlighted blue, or the font, I'm sorry, color is blue, which means the buyer was the aggressor. From here, we can actually trade the contract ourselves. So if I wanted to sell this 1 lot, oops, we actually were able to sell that strategy. You can see that I was the one who hit the bid. Therefore, the option history board here has changed the color of the font to red so that you can recognize that the seller was the aggressor. So the benefits of having this color-coded, essentially creating a heat map on the options ticker, is so that you can see is the majority of people selling options aggressively or buying options aggressively. Now you can see we're having some other strategies come in, and as these strategies come in, we are able to see several things, and I'd like to add 2 columns to this. So what we can see is, and this does help tremendously with understanding icebergs and what, oops, there we go, if it is an iceberg type order. So in other words, we can see the trade volume, the volume, and the total volume for the day. So let me put this in correct order. Oops. The trade volume is when someone made a trade that the quantity that they traded was 1. The volume is the quantity that somebody was, in this case, somebody was offering, and they're still offering more. So they've done a total of 6 on the day, and it's done in volumes of 1s, 1s, and 2s. The total volume, the TTV, is the total volume on the day. So how many contracts have traded of that strategy type. Now this also, I will actually mock one of these up real quick for you. We'll get an outright trade in here for you, so you can see these are obviously the option strategies that are trading, and again, you can right click on them and get access to them. So we can add to the market if you were interested in that, or respond to it. We will get an outright option here. Let me just open up a sheet real quick. And you will see in our contract history here. Oops. It's not allowing us to sell in the test environment. So I do apologize for that. Let's see, here we have, we did have some outright, we weren't able to participate in the outright option because the bidder offer did get hit. Oh, there's another one that got traded again. You can see that the August 1940 call to trade. So inside this window, you will see both outright options trading and you will see spreads trading as well. So the combination of your option history on the All tab will show you everything that's trading. Then you can filter it down by just showing what's happening in July, what's happening in August, what's happening in Sep, and then go back to your All tab. The RFQ window will show you all the things that people are interested in and may or may not actually be trading, but trying to get interest in. And I just chose, this is a very nice feature we just added. This RFQ came in and it's showing some net edge for us. So inside here, what we can do is actually we can sort by net edge. So in other words, it will continuously sort out what is the best strategy in terms of edge. We can also group that and say, okay, in the iron flies, which one is the best opportunity to trade? So by having theoreticals and managing theoreticals, we do have the advantage of understanding if something is under or overvalued. And by having that advantage, it puts the edge back in our pockets as opposed to giving it to the marketplace. So in this example here, you can see that the iron fly, we have it worth $9.45. They are bidding $10.50 for it. So it's an opportunity for us to sell that iron fly. If you look at this put spread here, we have it worth $181. They're bidding $160, offering $190. There is no edge here. So again, the benefit of having theoretical values and using theoretical values to analyze the current marketplace is to give you the ability to screen all different types of option strategies and find out which ones that apply to you are the best possibilities. The other reason for having theoretical values is if there were simply no bid or offer, and as an example, in a particular strategy, you would at least understand the value that it should be worth or near it. If there was only a bid and or only an offer, then you would know, and you were trying to do the opposite, you would have the ability to understand with the theoretical value approximately what price you should be bidding at this moment so that it isn't such a random event. Obviously, one methodology of finding out a marketplace has been to call down to the floor to get your option strategy quoted. Inside T4 now, you will have the ability to create any strategy you want. And be able to RFQ them. So we will build, let me just set this up very quickly. So we can build a strategy. We can see again that that strategy is not created at the exchange. We can RFQ that. It is now created at the exchange. We saw it hit the RFQ board. It's highlighted in yellow. And we can now also see that this strategy here with the green background, we have a bid as came in. So as soon as you type in or add the legs to the strategy solver, you will see if there is a marketplace. You will see if the UDS has been created. So right now we only have the bid. This is actually a perfect example of understanding the value associated with theoretical values. So an example, if this was a call spread you wanted to sell, you can see that the current bid is only 500. We have it worth 587. So logically we would say, well, we need to sell at or over that theoretical value. If we offer below, and I'm going to offer, and hopefully nobody will grab it. Let's see if I can drag this down. You can see that we are actually creating edge for someone versus the theoretical value, which means this has a high probability of being hit. Or, I'm sorry, of being lifted. So the problem ends up being without a theoretical value, I would have no comprehension of, is this a good, fair price? Is this, am I giving edge? Am I not giving edge? considering that there will be market makers in the environment, they obviously have and manage their own theoretical values, but now everyone in the marketplace can be armed with the same information that market makers are using, and you will have the same exact tools. Depending on a comparison of which program, you are somewhere between 90% and 30% lower than the competition having the same abilities. The one component that we do not have for CTS, which will hopefully be coming into the near future, is an auto execution for options, so that it will not only auto execute a strategy or outrights for you based on some criteria, but will also hedge and help to manage your position. So those are the components that we do not have. Outside of that, we have the ability to do practically everything else. In terms of the number of marketplaces, these are all the marketplaces that we support, from the CBOT, the CME, the COMEX, the Eurex, Kansas City Board of Trade, I believe that's Minneapolis, Grain Exchange, and the NYMEX. We also we are hooked up to the CME's test environment, so unfortunately what you don't see on here is any of the ICE products. But CTS itself does support the ICE products. And we do have the Eurex options on here. So we do offer many exchanges. We do not offer any equity exchanges, an example like the CBOE. We do not hook up to that. So that is probably one of the questions revolving around, can you hook up the, the interactive brokers to this? And again, unfortunately that answer is no, and the reason is because we have our own hosted environment. Now, Mike, I did see some questions come in.
Yeah, so let's take a look here.
I see it.
Terry wants to know, first of all,
global.
Yeah, Terry's asking, how much does it cost? So give us the options. You mentioned different types, like pro or not pro. What are we looking at?
Okay, well, the system we are looking at is the pro system. So it looks like he says, I'm with Global Futures, and I'm not sure if that means if he's with Global Risk. Global Risk actually runs on our platform. So basically, our price is $1,000. That's on a month-to-month basis. And what we do with that $1,000 is there is no CTS trading cost, meaning there is no 25 cents per trade. I'm sorry, 50 cents per trade. So in other words, you don't absorb, that cost is all part of the $1,000. There's no per trade cost, and it includes every single thing we have, which means it includes the news, which we have both the news and we actually have all the reports that would come into here. Includes our advanced charting package. So you get the best of everything with the package. Now, I'm not entirely sure, Terry, if you're still with us, is with Global Futures, is that an FCM or is that a, you're referring to a competitor that runs on our API, which is called Global Risk. So if you get the chance, if you could clarify that, that would be great.
Right. So
there's a second question here. Oh,
right. Sorry. Yeah. So Ted, right? He's asking about a web front end, and he says, you know, recently with the new CME restrictions, the way that the law is written from CME, there's an additional fee for that second data feed. So do you know of a way around that, or do you guys plan to work that?
Actually, we, with working with the CME, they have just announced that they are going to do, it's basically called a professional or a market maker relief system, that you will have the ability to register with the CME and say, I am already paying for the data. So your second user, if the CME is, you know, following through with this, they did just announce it and it is available on their website, that you will not have to pay the second fee.
Okay, very good.
So
Jeff is
Prior to this,
asking.
there was no workaround.
Right, right. All right, Jeff has a question just about the DOM. He says that right now, when he left clicks on an order, it closes the order. Is there any way to disable that feature?
Say it one more time, Mike. I apologize.
Yeah, he's talking about the DOM. He says right now, if he left clicks on an order, it closes the order. Is there a way to change that behavior?
Okay. First of all, is he referring to this window as the DOM?
Let's see what he says. I'm going to guess yes.
We don't have we don't have anything actually called the DOM. I know we have people who we call this our contract window. People have referred to it as a waterfall. People have referred to it as a ladder, waterfall.
Right. Yeah, he's saying that's it. Yeah, that's it.
So I'm assuming what he's saying is if he places an order and then he left clicks on it, that he doesn't want it to cancel.
Right.
I know left click and hold allows you to amend the order. Right click brings up a revised order ticket. In terms of, is there a way, I'm assuming the question is if he left clicks on it, and it will that is our methodology for canceling the order. I know if you press down and if you're holding down and you move off of it and then release the mouse, it will not cancel the order. So an example here, I'm currently pressing down on the order. I have not released the mouse button. I've moved off the order. Now I have released the mouse, and it does not cancel the order.
Okay.
So I'm not sure if that's exactly. What you could do is there a way, Mike, I apologize, inside this chat window, if I type something, does all the attendees actually see what I'm typing?
Yeah, anybody that's here will. On the recording, they won't,
okay.
But people that are here right now will.
Very good. So basically, what I'm going to be typing is these types of questions. You can also send to support@ctsfutures.com. We do have 24-hour support, and we respond via email and we respond via phone. So you can send your questions there as well. So if there's a question that arises at some time in the future, and the gentleman who was bringing up about the left click thing, it would be best to send that question directly to support. They are the ones who are most proficient in all the different settings. Basically what my partner and I do is we handle the professional options side. So that would be a general CTS setting, and that unfortunately I'm not familiar with enough to say that it does or does not exist. But support will.
Okay, so it looks like that's all the questions that are on the board right now. And you just said, so if anybody else has a question later, if they're watching the recording or whatever, then they can just email support@ctsfutures.com. Is that the best place to get sales support, or is there a different place they should go for that?
If that is the best place, what will happen is based on the question, it will be sent or sent to multiple people depending on what the question, so make sure we get it to the expert that understands it.
Right.
The one thing I did want to also show is that, let me just bring this over, I apologize. But by going to our website, we have several aspects in here that can also help. We do have the wiki, which has several, sorry about that, I'm on a remote desktop here, that actually does have several possible answers for people. And we also have several things in here, like in the professional options. We have general bullet points about it. And then we also do offer multiple training videos that help with several aspects of it, including the introduction to professional options, which gives you a step-by-step instruction of how to do several things for it. So this is available not only through our site, but through our YouTube channel at CTS Futures.
Okay, very good.
Well, Mike, is there any additional questions that I could answer?
Doesn't look like there are right now, but if anything comes up on the forum, I'll let you or Brian know, or the guys can just send an email to support@ctsfutures.com.
Perfect.
Or
I
your
appreciate
website.
it.
Sure. All right, guys. So thanks, guys, and I'll post the recording for this webinar a little bit later today on YouTube. All right. Thanks very much, Todd. I appreciate it.
Thank you, Mike. Thank you, everyone. Have a good evening.
You too. Bye.
Bye-bye.